Ladies and gentlemen, my name is Steffen Muniz. I'm board member of Huber Media. It's a great pleasure you're all here today for our public lecture we do from the DLD conference you might have heard about. We had fantastic 2.5 days here with lots of entrepreneurs around the world, and it's a great pleasure today to have Peter Thiel, one of the great founders of companies, here today to have a public lecture. Peter, it's great you're here today. You have started PayPal, and I mean, this is one of the fantastic stories. You sold the company in 2002, and today, what would be eBay without having PayPal? And I think that's a great success. And then you have invested again into Facebook, and I mustn't tell you that this is one of the very big success stories. And it's a great thing that you're here today to talk with us about this industry, about entrepreneurial drive, about data, and all that kind of stuff. Ladies and gentlemen, please welcome Peter Thiel.
When one speaks of technology businesses, I think there are two things you want to have. There's a technology component and there's a business component. And they act at the intersection. They exist at the intersection of technology and business. Technology, I think, is fundamentally about doing new things, doing things that have never been done before. And business is about having ventures that end up being profitable and that have sort of value in the long run. And it's worth reflecting how there's not always a big intersection between these two. And you can have areas of engineers often like technology for its own sake, or scientists, where you invent new things, but you don't really ask, do they have value as businesses? And then many business people are interested in businesses that are profitable, but don't particularly care whether they're doing anything new. And I think venture capital and Silicon Valley exist at the intersection of those two. And there are many examples of businesses that have no technology or technologies that have limited business. So, example, in most businesses today are not heavily technological businesses. So if you have if you're operating a restaurant or a donut factory or anything like this, it might be a worthwhile business, but it does not require a lot of innovation. And then there are many areas where innovation has turned out not to be all that great as business. So, for example, in the 1980s, disk drive manufacturing in the United States was an area of tremendous progress. The companies got dramatically better from year to year, and you could come up with a new disk drive. It would replace everybody else in the world, but in 2 years, your business in turn would be replaced by somebody else who came along. So this was an area of tremendous technological innovation, even though the businesses turned out not to be great businesses. And so the challenge as a venture capital or as a technology entrepreneur is to identify businesses where you're doing something very new, but it is also somehow very sustainable over time. And I think one of the great paradoxes that's true of technology, and especially the internet area, is that successful businesses grow very fast, but you should never be deceived by the speed of the growth to think that the value exists in the short term. The value exists very far in the future. We went through this exercise at PayPal in March 2001. We'd been in business for 27 months at the time, and we did sort of a financial model on the company. It's always very fictitious to do these kinds of things in a startup, but it was sort of an interesting exercise. And the company was growing at about 100% a year. We had a 30% discount rate, so we assumed, $1 today was worth much less than one several years in the future. And then, eventually the growth would slow down. But when you did the math, it turned out that about 3/4 of the business's value existed in the years 2011 and beyond, in 2001, when we had been in business for only 27 months. And I think if you look at all of the great technology companies that have emerged in the last decade, they are still very much about the distant future. And these businesses will be valuable if they are bigger and still around in the 2020s and beyond. And so I think this extraordinarily long-term perspective is actually critical to the value question. And that's why people often talk about the first mover advantage or the next mover advantage. But I think the most important thing in a way is to be the last mover advantage. And the great technology businesses are often the last in their category. Sometimes they're the first, sometimes they're second, but it's really the last ones that are most valuable. So Microsoft is a valuable business because it is the last operating system. Google is valuable because it is the last search engine. Facebook will be valuable if it turns out to be the last social networking company. And this is, I think, this question, and so the sort of the paradox that's implicit in technology businesses is you want to start. You're starting very small. You want to start by doing something very new that's going to disrupt and change the world. But then you don't want to be disrupted in turn. And then 5, 10 years in the future, once you have a larger business, you want that business to somehow be extremely sustainable and around for a long time. You want it to have some kind of powerful lock-in, either through network effects, some technology advantage, economies of scale, maybe a brand, but something that gives it a very long-term and sustainable advantage. And this is the question we always look at. So I think in general, the kinds of businesses that I think are great have some combination of very talented people, a breakthrough technology, but also a long-term business strategy that's oriented in this sort of way. When I've looked at venture capital and what has worked over time, one of the things that is very striking is that the things that end up working are ones that people stick with and build over many years. And the story I always tell with respect to Facebook, that's sort of, and I have to be very careful what I say about Facebook because it's a public company, but I've told the story before and it's happened many years ago, so I think I'm safe talking about this. This was probably the single most important decision the company made. It was in July of 2006. The company had been founded about 2 years earlier. At the time, it was only a college site. We had maybe 7 or 8 million students were using it. The revenues in 2006 were tracking to about 40 million in revenues. There were no profits. It was still sort of roughly at break even as a business. And Yahoo offered to buy Facebook for $1 billion. And we had a board meeting in July of 2006. There were 3 of us on the board, myself, Jim Breyer was one of the other venture capital investors, Mark Zuckerberg, who was at the time 22 years old. He owned about a quarter of the company. And the truth is both Jim and myself probably at the margins thought we should just take the $1 billion. Zuckerberg started the meeting by saying, this meeting was a formality. He hoped we'd be done in 10 minutes. We'd been offered $1 billion. We obviously had to turn it down, but we had to have a quick board meeting to sort of formally vote down the $1 billion. We then had a long discussion about this. It was not a 10-minute meeting. It ended up being a 6-hour meeting, and it was like, $1 billion is a lot of money. You can always do a lot of other things with this money once you get it. And the answer was, well, I don't really know what I'd do with the money. I would just start another social networking company. I kind of like the one I have right now, so why should I sell? And we had this sort of long back and forth discussion. And I think the one argument that Zuckerberg made at the time that was very convincing was that there were all these plans for additional products that were going to be built and that were clearly not being valued by Yahoo because Yahoo was just evaluating the business based on what already existed, not on the things that were yet to be built. So we became comfortable. We'll wait a little bit longer. And I think that was sort of a critical and correct decision. And I think and there are all these questions, that I think one has to ask why the United States has been so much more successful in venture capital and the creation of new technology businesses than Western Europe or Germany in particular. I think it certainly has nothing to do with the talent of the people. You have a phenomenally talented group of people in Western Europe and Germany in particular. The conventional explanation I think people often give is that there's a fear of failure, that people are too afraid to do something and too afraid to fail. I don't particularly like that explanation. I don't think failure is ever a really good thing. People often say that it's a good thing after something's gone wrong and it's a learning experience or it's somehow something like that. But I don't think you should actually do these things because you think there's no price to failure. It's normally a fairly big problem when these companies fail. It's always psychologically tough on the people, and you don't actually want to be involved in a business that fails. And I think one should not underestimate the problems associated with that. But I would say what I think the challenge is actually more a fear of success, that people are afraid of being incredibly successful. This is not something that's often considered socially acceptable in a socially democratic society. If you make $1 million or 5 million euros, you should sell your company and retire. And while that may be a very good outcome for people as entrepreneurs, that's actually not how these great businesses get built. They get built by people who in some sense think the business is more valuable than anything else, including the money you could get for it, and who therefore stick with it and build it and reinvest in it year over year and build a fantastic business. I think the classic one from the US in the 90s, in my mind, is Amazon, which has been, was a phenomenal success story over many years. It was always unprofitable because it kept reinvesting money and building the business. This was not what people were supposed to do, but over time you built this phenomenal franchise. And I think that's the sort of the classic technology type story. And when one looks at this as a venture capitalist, just as a bit of a tangent, it is actually really critical to have a few businesses that do extremely well. It doesn't. You end up with a distribution of these companies where you need, as a basic rule of thumb, you need the best business to end up being worth maybe 10 times as much as the amount of capital you have under management as a venture capitalist. So if you have a $100 million fund, if your best business you invest in is not worth at least $1 billion, chances are you will lose money. And I think this is sort of it's a very sobering fact about venture capital. I've done the whole math analysis on this, but you need to be able to invest in people who believe they're doing something new, transformative, that's really going to change the world and that will stick with it over time. People often ask me, what are the major new themes in technology? What are major new areas to explore? And I always am very uncomfortable with that question because I think there are almost, the correct thing is almost always somewhat anti-thematic. The great technology businesses are in some sense unique and one of a kind. And so the next Microsoft or Google or Facebook, I think, will neither be an operating system, nor a search engine, nor a social network. It will be something that's in a unique new category of its own. And sort of there's sort of an intellectual version of this question I always like to ask, and there's a business version. The intellectual version in an interview is, tell me something that's true that very few people agree with you on. And this is a question that people find incredibly hard to answer. They're physically uncomfortable trying to answer the question in an interview. And then the business version of this question is, what valuable business is nobody thinking of creating? If there are a lot of people who are thinking of creating the same business, you should just open a restaurant. There are a lot of and it will be a ferociously difficult thing to do. If you're going to start a business, you might as well try to start one where, if it works, it will be really successful, rather than one where you're competing like crazy with thousands of people who are doing something just like you all the time. And so that sort of would be the homework assignment I would leave you with is, what is true? What do you know to be true that almost nobody agrees with you on? What great business can be started that nobody has thought of? And then, of course, the sort of the applied, and I think all these businesses, they start with a story. They start with a story about how they're going to change the world, how there's something that people have not yet understood. And you can sort of test how robust the story is by, does the technology work? Are the people really talented? But sort of a very straightforward version is just, is the story even convincing to other people? And so one question I often like to ask people when they're just getting started, if 2 or 3 people starting a business, is why will the 20th talented person join your company? I understand why the first 2 or 3 people are doing it. You get to be CEO and put that on your record, or you get to call yourself a co-founder or something like that. But why would the 20th talented person join your company? Because all very successful companies end up having 20 people, more than 20 people. They end up with 20 very talented people. And you need to have an answer why the 20th talented person will join your company rather than a Google or some other successful technology business where they can get paid more, they have to work less, it will be safer, it'll be cushier. And you better have an incredibly good story to convince people to do something other than what they would normally do. It's normally not an economic story. By the time you have the 20th person in your business is not going to be wildly profitable. It's not going to be very big. It will still be a business that's fundamentally about the future. The story has to be a convincing story about the future. And that's sort of how all these businesses come together. Is there's a unique vision about something that's not yet been done, and there's some ability to convince enough people to work on it together, so that what was once fiction over time becomes a fact and a reality. And it just seems obvious to people that this should have happened. It seems like a trivial, obvious undertaking when at the very beginning it was extremely different. At any rate, I could go on and on, but I thought I'd just start with a few thoughts like this and then maybe continue with the conversation and questions. Thank you very much.